our next talk, we have a fireside chat with Jan Oliver Sell, the CEO of Qivalis. The title of this talk is Securing Europe's Financial Future in the Age of Stablecoins. This conversation will be led by Daniela Barbosa, who is the General Manager of Decentralized Technologies at the Linux Foundation. Let's give them a round of applause.
All right, good afternoon. Thank you for joining us. I don't know if we could top hoodies, crypto bros in hoodies, but I think, it's really exciting to be here at Paris Blockchain Week. I've seen a lot of faces that we see year over year, and it's great to see the energy in the room, talking about not necessarily just experimentation and MVPs and POCs, but actually things going into production. The conversation today is going to be focused on specifically on stablecoins in Europe, where I think there's just a fantastic opportunity for Europe to take a leading role in creating, using the technology to actually create an environment in Europe to leverage stablecoins. And I'm very pleased to introduce Jan. And I'm going to let you introduce yourself and tell you a little bit about your background, like how you got here as well. Because what you've built and what we're going to talk about in the next 20 minutes is something that I think is really going to be market leading in Europe. So, Jan.
Thanks a lot, and thanks to Paris Blockchain Week for having us. Well, I used to be one of those boys in hoodies. Used to, see crypto in that space as well, and so it's definitely come a long way, especially with the increasing institutionalization, the increasing realization that the blockchain can provide certain efficiencies in speed, in cost, and in decentralization that are beneficial to all manner of industries. So, in my own background, I spent quite a long time in financial services. I spent about 20 years in London working in what we now call the TradFi space, and moved into blockchain in 2018. Moved to Berlin and have been working on various blockchain-based projects. Most recently, 4.5 years at Coinbase, where I set up the German business. Managed to get the first ever crypto custody license for Coinbase in Germany, and now since last summer I've been working on Qivalis. And Qivalis, it's a project to build an EMI, to build a European stablecoin backed by, at the moment, 12 European banks. It's an open consortium behind the stablecoin, behind the issuer, and as I said, I guess we're building just the issuer piece. So we're building the piece of infrastructure that connects the euro to the blockchain, but backed by this open and growing consortium of European banks. So behind us we have at the moment banks like ING, UniCredit, BBVA, DECA from Germany, for example. And this consortium is growing, and there's more and more interest from the institutional sector to get involved in this space.
Yeah, it's a very impressive list of banks to start with, and I certainly, we've seen this bank-led consortium-based models for many years. So I've been at the Linux Foundation since 2017, working with many different projects under our blockchain practice. And one of the things is we see bank-led consortiums taking another step forward. So I was wondering if you can, tell us a little bit about how did the banks all come together? How did it all start? What was the pressing need that really got them in the room together with you?
Well, it's actually the journey started 3 years ago with ING, with a couple of key people at ING who saw the benefits of blockchain-based infrastructure for the financial processes within that bank, and how stablecoins could be one of the sort of key drivers of that improved efficiency. And over time, they convinced more and more banks to join this consortium. So it took about 3 years to find a quorum, if you like, a core of banks to create the issuer, which then they would end up working with, or will end up working with, or are working with now, to then distribute the stablecoin and use it. So basically, I obviously can't talk for the banks, but my experience of talking with the banks is that there's real interest at all levels of the banks that we're talking to. And as I said, it's a growing consortium, so we're talking to more and more banks in Europe. And there's a real interest in looking at where the blockchain can provide efficiencies on certain processes, and how do you do that? And in order to do that, especially in financial processes, you need a representation of the euro on the blockchain that has deep liquidity. And I think this is kind of one of the key advantages that we have as we build this is there are a number of stablecoin issuers in Europe at the moment, but there's still this issue with liquidity. And I think where we're coming from with backing of these banks that will end up using the stablecoin over time, we will naturally come to a position of deep liquidity with a euro-based token.
Okay, so liquidity. So maybe there's people in the audience who are thinking, do I go alone and try to build and launch a stablecoin on my own, or do I join a consortium? Liquidity is one of the things that the consortium will bring to market. What other efficiency parts could they be considering instead of doing it on their own, launching on their own?
Sure. It comes down to the fragmentation as well of the market. The more different stablecoin issuers we have, the more fragmented that liquidity. It's similar to looking at the number of blockchains at the moment. The more blockchains we have, the more it fragments liquidity. I think there will be some consolidation in the blockchain space, and I think the same way in the stablecoin space. If you look at the US dollar stablecoin space at the moment, you have maybe 300 or 400 issuers, but you only have 2 or 3 or 4 really significant issuers. I suspect we'll end up in a similar kind of situation with the euro, maybe not 300 or 400 issuers, but definitely 2 or 3 significant issuers. And I think the difference will be the ones who have users and institutions using it. So on the one hand, obviously, the DeFi space and the crypto natives are a very important piece of how a stablecoin gets used and how on-chain native yield in euro gets created. But then the second wave will be those institutions that have worked out that for cross-border payments or for settlement of tokenized assets, for various use cases, and a euro on-chain as a stablecoin with liquidity is just the better solution.
Yeah, and we'll talk a bit about use cases, because I think it's very critical to start with the use cases, understanding what use cases you want to deliver versus trying to solve everything for everyone, right, as well. So let's talk a little bit about, the European sovereignty issues. So, the euro is the second most important international currency, right? It makes up 20 to 25% around the world. Yet on-chain, the euro represents only about 0.2% of the stablecoin ecosystem. What does that tell us? How are you going to fix it?
I think it tells us that the US dollar has a first mover advantage in a sense. So at the moment, especially many on-chain transactions, including things like perps, settlement of perpetual derivatives, settlement of or borrowing and lending in the vaults. This has all traditionally always been in US dollars because, again, that's where the liquidity has been. That's where you've been able to move larger amounts of money. And so there's a whole ecosystem around the US dollar that has developed on-chain over time. We don't have that same ecosystem yet for the euro. And I think that's one thing that we see as our mission at Qivalis is to help to orchestrate that ecosystem, to make sure we get to the place, to make sure the euro on-chain gets to the same place it is off-chain as the world's number 2 reserve currency. So we get to a place where where the euro does make up 20% or more of on-chain transactions as well.
Yeah, and I think it's important to understand that I live in the United States. I'm actually a Portuguese citizen as well, but really important for the sovereignty of Europe to have access to that. Why, when talking to the banks and to the participants in the consortium, where do you feel the most urgency for that is? What's driving the business decisions here in Europe?
It very varies from institution to institution. Each of the banks has their own view and their own use cases that they find interesting. But so there's sort of two angles to it. On the one hand, there's this realization that for certain processes, it just makes more sense to do it on chain. It's faster, it's cheaper. You have settlement finality. And so there's a real interest to move into that space, but again, you need the euro on chain for it to make sense for a European institution. And then on the other side of that is, if you don't have a euro on chain, you are going to start to move into these on-chain solutions, but you're not going to have a choice but to use the US dollar. And so this is part of this European sovereignty angle, which I think we need to take very seriously as Europeans. And so this is one of the things that has kind of driven the banks to move forward with this process as well, and to establish Qivalis. And one of our sort of driving motivations is building essentially a cornerstone of European digital autonomy. In the current geopolitical climate, unfortunately, Europe needs to stand on its own 2 feet, and I hope we can be part of the answer that allows Europe to do that.
Yeah, and I think it's fantastic because the technology is an enabler to allow Europe to do so, right? Where in the past it wasn't. So it's really great to see. How do you see Qivalis as one of the leaders in the industry, making sure that need is met here in Europe?
I would actually say we're maybe a slight laggard, because we're actually only still in the licensing process, where we have other euro stablecoins that already have the license. But I think the big advantage that we have is that over time, as banks join the consortium, we have a network of users and clients who will bring institutional level liquidity into the token, and so over time, I think we have a certain advantage there that will allow us to become the leader in the space.
Can you talk a little bit about the licensing process that you're going through now, what you anticipate?
Sure. So we founded the entity in October. Again, after sort of 3 years of negotiation between the banks to create the consortium, we founded the entity in October. Since then, we've been building the team, going through the licensing process. We're in the process with the Dutch National Bank, the DNB in Holland, to get a license as an EMI, Electronic Money Institute, which will allow us to issue an EMT, which would be electronic money token, essentially as a payment token under what the Genius Act calls a payment token, what MiCA calls an EMT. But that licensing process is a standard process of back and forth with the regulator to make sure that the regulator sees and understands that we have compliant processes in place, that we have risk management in place, that we are basically building an institution that is compliant and secure.
That's excellent. Let's switch a little bit to the use cases, because we were having this discussion yesterday about really the need to identify the use cases that are going to drive adoption most forward here in Europe. So if you can share some of the use cases that the banks that you're working with are working on.
Sure, I kind of see it as a continuum, right? I think on the one hand we have we have the space that already exists. We have DeFi and crypto trading and crypto natives who already operate on chain, who need a euro, because at the moment you've got your yield in USDC, which means you're losing value almost on a daily basis against the euro with the US dollar. And I think there's the whole space there that needs a euro on chain with liquidity, as I said. But then the banks are looking at, obviously, their own use cases, where I think it's important to note that we're not looking at intra-European use cases, because you already have payment systems that work in Europe. You have SEPA Instant and so on. But for cross-border payments, for example, a number of the banks are very interested in that, and I think they're already looking at getting involved in that space sooner than maybe many of you think on the stablecoin side. So in cross-border payments, for example, you make a payment at the moment. It can take 5 to 10 days. It can cost who knows how much, right? Up to 5%. If you make the same payment in a stablecoin, it can take you maybe 10 minutes. You can actually watch the transaction happen, and it'll cost you a fraction of a cent, regardless of the amount you send. So, the advantages are obvious and huge. And then you have the other side with settlement of tokenized assets, for example, where you have banks creating tokenized money market funds or tokenized debt instruments, where part of the big benefit of tokenization is so-called atomic settlement, where you have the possibility to settle the transaction on the blockchain, meaning it settles against a stablecoin or another fiat instrument on chain, which allows it to settle instantly. It takes away counterparty risk. It makes the whole transaction much more seamless, and allows longer term will allow things like 24/7 cash management. So if you've got a corporate client of a bank, for example, you've got a large cash pool sitting there. Let's say you had a payment from Brazil that arrived on a Friday afternoon. At the moment, that money sits there until Monday, and you've got nothing to do with it because the bank's process ends at noon. But if you could run this on stablecoin rails, on blockchain rails, that treasurer would be able to take that money and park it into a money market fund over the weekend and earn their yield. So the settlement time there becomes almost a yield benefit.
Yeah, there's a lot, certainly a lot of benefits, and I think from an industry perspective over the last 10 years, that's what we've been driving, right? And it's really great to see the banks, the institutions, and very importantly, the regulators also understand that efficiency in the market is really being pushed forward because of the technology, because of blockchain or DLT or whichever term you want to use as well. So let's talk a little bit about the technical strategy. Qivalis is blockchain agnostic, right? So there's no blockchain to rule them all. We were just having a conversation. It's like every week there's a new blockchain. There will be consolidation. I agree with you as well. But how does the consortium and the banks decide on which blockchains to use for which use cases?
Again, it varies much varies quite a lot from bank to bank, but also we have an open consortium of banks behind us, but we're also talking to all manner of CASPs and other intermediaries who we're also working with, because it's not a closed loop that we're building. It's an open token that will be available for everyone to use in DeFi as well, and so on, and use in all kinds of use cases beyond just the banks. And so we have to look at also where is the use of stablecoins at the moment. And at the moment, you have a lot of the use cases that are alive at the moment are on Ethereum. So obviously, we're talking to Ethereum, but we're also looking at a number of other chains where you might have a more focused use case for tokenized settlement of tokenized assets, or there's also certain permission chains that are interesting for a banking environment. But again, it's not only the banks we're talking to. We're really looking at where we're looking at putting the euro on the blockchain. So what we're looking at is where do we have efficiency gains that can be gained via blockchain-based processes, and where do those need the euro, right? And so wherever that interface comes about, we want to be there.
So when you think about interoperability and making sure there's no fragmentation across these networks, what is your perspective? How are you going about making sure that the right partners are in the room for that?
Yeah, it's an interesting one, because I think there's only a certain amount that we can do as the issuer to create a token that's fungible across various networks. But there's also, at the moment, I think there's a number of people building this kind of stablecoin clearinghouse, if you like, which will also hopefully also allow a certain amount of interoperability. I think there's also smart people working on stablecoin exchanges, on-chain FX. These are all various mechanisms that will allow for interoperability between tokens and between currencies on chain.
Yeah, I mean, there's a big need right now for standards, right? For token standards. I know at the Linux Foundation at LFDT we have a project that we're just about to launch called OTAS, the Open Tokenization Asset Standards. And these are things that, as a community, many of us have been working on. There's lots of people who've been in production, with systems, and now we need to come together and figure out how do we make technical standards and then token standards as well across the ecosystem. So what does go live look like for Qivalis?
So go live is, well, hopefully the second half of the year once we have the license. But as I've been saying, I think we see one of our roles as trying to orchestrate an ecosystem around the euro on chain. How do we make the euro on chain as usable and as useful for people who are on chain, especially people who live in euro at the moment, and who would rather be operating in euro than in dollars. And so go live hopefully will be, like I said, the second half of the year will be part of a growing ecosystem of euro stablecoin users.
Great. So as we finish off, because I know I see the red time a lot. two things. One is, if the audience wants to get involved, how do they go about doing it? And the second, I'm sure many people here at Paris Blockchain Week this week are wanting to take back to their executive teams what's next, what are they going to do? So what is one key thing that they should put on their agenda for their next strategy meeting with their executives?
Well, come and talk to either myself or Svenja or one of the other members of the team here in Paris. Look us up on Qivalis.eu. But the takeaway is blockchain is coming, these processes are moving on chain, and you need to have a euro on chain as a European institution to operate those processes. So look at euro stablecoins, understand why they're necessary, understand why your processes should be on chain, and build it.
Excellent. Well, Jan, thank you for your time. I'm definitely keeping an eye on what you guys are building, and they're supporting you as well. So thank you all for joining us today, and we'll see you next year after we go live. Here.
Thanks, Daniela. Thank you.
Welcome to Signal Week.